morning and welcome to the VSA Capital Tech and Transitional Energy Podcast. And it's actually Friday the 5th of September. We're running a day late. Phil's also away. So I've got David. David, how are you?
Very good indeed, sir. Very good. Can't replace Phil, but he's on holiday. But would be happy to kick off with a few things and then develop it from there.
Well, we'll just see. Sometimes when it's you and me, David, we just natter about whatever, really, and hope that listeners enjoy it. We don't have to be too techie, too transy. Actually, I'm not even say that nowadays. Too transy, you get into trouble with that, don't you?
I think you do.
A certain Graham Lynham or something, the founder of Father Ted, get into trouble for that? I don't know. You do have to be careful what you say nowadays, don't you? And of course, not that I want to go straight into politics or anything. What an amazing time we're having in politics at the moment. Angela Rayner, will she stay or will she go? There was a song like that, wasn't there? But I think that whatever happens, her credibility is shot to pieces. She's just like all the rest of them. But we'll see. But I think the main thing that's caught my eye this week is you look at the news and you see a picture of the 80th celebration in China. And you see this picture the whole time of Xi Jinping with President Putin on one side and Kim Jong-un on the other side. Now, I think that sends a pretty big message, doesn't it, David?
It does. And very impressive military parade. And, a big statement.
Well, I mean, the statement clearly is that watch out the West. You know, we're standing firm as I suppose it's what you'd call the communist side of the world, and we now want to rule it. So, I mean, the first thing I think of when I see that picture is, oh my God, buy defence stocks. Now, they've already been running dramatically, but I think you can say that they're going to continue to run because the world has changed. I mean, we've talked a lot on this podcast I have about the end of Bretton Woods, which lasted 80 years. That picture says it all. Bretton Woods is all over. There is a new world order. And so you need to rethink your whole sort of outlook on the world because of that picture.
Yes, and you can, that they've come up with some good ETFs if you want a broad exposure. There's a NATO one and many others to get a footprint there. But we've had what were those recent defence orders that just popped up just recently that Keir Starmer was.
Well, we won some nice warships, didn't we?
Exactly.
Yeah. I mean, I think the whole thing about defence is, as we all know, that during war, technology advances dramatically. And we are going to see some dramatic advancements in technology, which we're seeing anyway. But again, if you look at that parade, there were robot dogs and robot soldiers. And, the world is just moving on so dramatically in that respect. And the West has got to get its act together. It's no good at all, for want of a word, infighting. And, the French going, we don't like the British, and the British going, we don't like these. And and the Americans going, we don't like Europe. Guys, it's time we all got together to protect ourselves against the East, effectively. Now, whether politicians are smart enough to do that, who knows? I mean, unfortunately, I don't have a lot of time for politicians. They just aren't very smart. But that's what's got to happen. We've got to get our act together because there is a genuine threat out there. And the other thing, David, is, I've just come back from 2 weeks in Mexico, and it was obviously a mining trip, so not for this podcast. But what kept coming up in my mind, and I kept talking to people about it, and I've talked to people since I've got back about it, and that is that, America actually needs its two closest friends, shall we say, from a land point of view, to be tied in with it, which is Mexico and Canada. And at the moment, that's not the way it's going. And I think we need to see some change, basically, from whether it's America or some other way. I don't know is the total truth. But we need to see that North America, which is Mexico, United States and Canada, all working together. We need to see them working with Europe. But again, that's a slight side issue from my trip. But it became very apparent to me that, Mexico wants to play games, wants to play nicely in the park, should we say, with the United States. It doesn't want to have issues with them. and it doesn't need to have issues with them either. Um,
Well,
anyway,
well,
that's my sort of, yeah. Go on. Sorry, David.
yeah. I was going to say, well, hopefully, Mr. Trump is playing his style of play hard and then backpedal a bit, and so hopefully he will take a more commoditative line with the two countries going forward.
The trouble with Trump, he's full of hot air. Let's be honest. I mean, some of the things he does I quite like, but wasn't it about 3 weeks ago he said if Russia doesn't start having peace in Ukraine, I'm going to get cross with them. But that was 3 weeks ago, and he said he'd get cross in 2 weeks, and he hasn't. He's let it just roll on, and now I see today that Putin has basically said he will not allow Western troops in Ukraine to keep the peace, and if they do go in there, they become a target of Russia. That is not Putin playing to what Trump wanted. So
No, it isn't, and it doesn't surprise me one iota. I think they were really portraying that right from the outset.
yeah, I think the West has got to, actually stop, as I say, stop infighting and actually get together and make some firm decisions. We're in a very difficult spot at the moment. And again, going back to the UK, obviously the budget has now been set for November the 26th. We all know it's going to be an absolute disaster. We've, I've talked about, is civil war coming to the UK? I mean, we're getting so tantalisingly close to that, which is frightening as hell. But of course, we think the UK is in a terrible mess. France is probably an even worse mess. And it's time that the UK and France stop fighting each other. We're both in such a mess. We need to work together. And that's actually what people need to wake up to, is that we've just got to sort ourselves out of this mess. But look, moving back to a bit of tech and trans maybe, because the good news is that good moves in technology can help us get out of all of this mess. And the UK is actually very good at technology and that sort of stuff. We're really good at it. So we need to look on the bright side, don't we?
We definitely do, Andrew. You're painting a fairly dark picture at the start of this, but let's shift a gear to some positives.
Oh, go on then. Shift the gear to some positives. Go on, David. Tell us what you think.
Okay, well, no, right, more, well, back onto towards the companies, but to be fair, in the US, because Phil and I were exploring it last week, I was chatting about in the semiconductor space, Marvell and Broadcom, and I was mentioning that their earnings were upcoming. Now, these guys are in the custom ASIC market, which is application-specific integrated circuits, and they respectively have 14 and 50% market share. Now, Marvell's numbers disappointed after we had the Tech and Trans last week, but Broadcom's have come out really strong. And you'll see in Europe today, ASML is up and others are also following trend in that. And the Broadcom's Q3 revenues were sort of 15.9 billion versus Street of 15.8. And their AI semiconductor revenue was equally beat the Street. And they also gave a very good Q4 outlook, which has them at 17.4 versus a Street of 17.05. So the other thing that really set a precedent for the European names to move up was that their Broadcom is going to help OpenAI design and produce an artificial intelligence accelerator from 2026. Thus, they're getting into that lucrative sphere that is dominated by NVIDIA. And Broadcom has secured 10 billion in orders from OpenAI. So AI is alive and well, and some interesting market positioning taking place. But I must now flip, because I keep on going, with Phil on the US, flip to the UK. But one of the things I wanted to ask you, because the chart caught my eye, do you know Kainos Group PLC particularly well? Because if you look at the chart, the stock moved up on its H1 scheduled trading update, and it might just have broken a downtrend. I mean, are you familiar with them at all?
I know them a little bit, but not well, is the answer, David. I mean, unfortunately, you can't quite know every stock in the world, although I've been around long enough, a bit like you. I mean, this is obviously a group that, as you say, it had quite a nice sharp spike up. But do bear in mind, back in the sort of end of the COVIDs, it was actually twice the price, if not more. It was at 20 quid. Now it's at about £8.70. But tell me what you're thinking.
Well, so they announced that they're building on a solid Q4 performance and have delivered sequential improvement in the period. The board now expects revenues for the year ending 31st of March at the upper end of consensus, driven by a stronger sales in the period. The sales success is creating opportunities for further operating progress during the rest of the financial year. And I think that this must have been a catalyst to the market of a bit of reassurance and helping that stock leap up. So I don't know the company too well, but that chart really caught my eye. They're being pretty prudent too. They're saying that their outlook they anticipate delivering adjusted PBT in line with current consensus forecasts. So I think that is one to sort of keep an eye on.
I mean, I see that Berenberg, Shore Cap, Canaccord Genuity, they've all turned buyers of the stock. So there's a bit of a ramparoonie in terms of broker recommendations taking place for it. And look, the market in general is still feeling pretty healthy. The FTSE 100 continues to go up. There is a bit more money sort of coming into the market space, shall we say. We know that activity in the market is brewing up actually quite nicely. Now, how do we know that? Two little factors I'll give there, one at either end. Without saying anything I shouldn't, because we are a listed company, but VSA is trading happily in line with guidance, if that's a good way of putting it, David.
Yep.
Without saying anything I shouldn't. But we also had a trading statement from Peel Hunt this morning, where they said that it's above market expectations, and that markets for them are particularly in the sort of M&A and trading transactions, better than expected. So we know from that sort of news that markets are quite, shall we say, buoyant. That helps everything. So I mean, there is, if anything, you want to be a little bit on the buy side anyway, should we say?
Yeah. So kind of on that sort of theme-ish, but just because we know that in the US, valuations are really, really high in the tech arena. If you start looking at some of the UK tech names, there could be some interesting value. Now, one name that I was looking at, but it's way down in comparison in market cap. But I was just wondering if you knew it, was Journeo, who announced an acquisition of the Crime and Fire Defence Systems Limited, CFDS. I wondered if you were familiar with that company, because when I had a quick look at that, when you start putting, it's going to be accretive. If you start putting the numbers in, it looks pretty attractive. It doesn't have a demanding valuation. I mean, the stock price moved up very nicely, and the numbers are now in Bloomberg. I haven't been able to get sort of Phil's input, but I don't know if he knows them too well. But do you know them?
Phil knows them quite well, because again, we've talked about them quite a lot on previous podcasts, and they've obviously been a very good performer so far this year, up 60%, so which is always nice to see. I wouldn't say it's one that I know particularly well, actually, to be honest with you. So sorry, can't help you there, David.
Well, it's no worries. I think so. So this Crime and Fire Defence Systems Limited is expected to add 4 million revenue for the balance of the quarter for Journeo, but going forward, they should be able to increase their revenues the following year by 17 million, and so I think that it's now in the Bloomberg numbers, and as I mentioned, looks pretty undemanding. So well worth having a look. And perhaps when Phil's back, we can revisit that one.
Yeah. Sounds a good idea. Yeah. Keep going, David. I like it. You're doing a good Phil impersonation here almost.
Well, the other one is Avingtrans.
No, you see, I like Avingtrans. Do you know why?
No.
Because do you know who the non-exec chairman is?
Nope.
Roger McDowell. And Roger, I think, is probably the best non-exec chairman currently in the financial markets.
There you go.
Very smart guy, picks all the right companies. They nearly always perform really well. If he does get in a hole, he's very good at getting out of it. And there's no messing around with Roger. So I have a lot of time for Avingtrans. It's been, of course, a great performer. Again, it's one that we have talked about quite a lot on this podcast because it's a very interesting company, but also because I have a lot of time for Roger McDowell. But anyway, you tell me what you were going to say, David.
Well, so a few days back, the 2nd of September, I think, their US subsidiary, Hayward Tyler, secured 16 million in nuclear contracts. So that's 2 new nuclear contracts with a combined value of that amount from long-term existing customer Korea Hydro and Nuclear Power. And it was a very short statement, but they basically say the revenues from those contracts will predominantly be weighted towards fiscal 27, with a portion of the value helping underpin 26 forecasts. Now, the stock price moved up. Those 27 numbers aren't in Bloomberg. That's not surprising, but that looks a positive. So that's why I thought we'd highlight that one again.
Yeah, look, I mean, by the way, I'm not I'm not being unfair on the executive management, who are also very good. But Roger wouldn't work with an executive management that wasn't very good. But look, this is also a very nice sort of steady stock. It had a major lift up, shall we say, in about 2021. It did some things that were really enhancing to shareholder value. But if you look at it, it's one of those classics. If you look at the chart, it goes from the bottom left-hand corner to the top right-hand corner. I love companies that have that just steadily keep growing. Those are the companies that I love to be invested in. So, yeah, I'm a big fan of Avingtrans.
Good stuff. Is another name that Phil has mentioned Dialight, the global leader in LED lighting for basically heavy industrial applications?
He has occasionally, not a lot. We haven't spent a lot of time on it, I don't think. But if you've got something to tell us on it, then tell us, David.
It's not particularly groundbreaking because you won't be surprised when they came out with a commentary that they've had challenges because of tariff uncertainty. I mean, they're not unique there, and demand trends and operating conditions for the company at end markets have remained soft. And sales are marginally down. And I guess the reason that I mention it is that they reassured because the group is positive on profit and cash flow, cash generation, and ongoing margin improvement and overhead cost reduction. This relates to the benefits from their transformation plan. So I guess they're just telegraphing that this transformation plan is delivering for them. And net debt is down. So basically, they're confident in meeting market expectations for the 31st of March 26, and a further update can be expected next month. So noted the share price was up. So despite those softer trends, I think they're giving a fairly positive message, and the market's taking it well.
Excellent. That's good news. Actually, again, look, as you say, we've gone from a rather negative start. It's not a negative start, it's a reality start. To lots of bits of positive news there. Tell you what, we've chatted for 20 minutes, David. So why don't we just call it a day there? And I think Phil's back next week. So you did very well. You did very well whilst I was in Mexico. So thank you for standing in for so many weeks.
Pleasure.
All right. See you, David.
Many thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.